of clear insider trading. Here's what's happening. The stock is Activision, and as you can see right here, it went down from about 78 to 66, 67. Why did that happen? It happened because Activision released news that its video games were delayed, and this caused like a 10% stock drop. But we have a very interesting situation when it comes to options. Here are the options. As you can see, this is like expiring, I think, November 5th. Well, basically options that are expiring tomorrow or day after tomorrow. And as you can see, when the stock dropped, this was a put. It went from about like 38 cents to all the way up to $5, $4.50, $4. But here's this is not the interesting part. Of course, the put soared after the stock dropped. Look at the volume. Here we have volume of 1.5, and all of a sudden, about a day before, so this happened on the 3rd of November, a day before, the volume of the options went up. It was 127, 435 options. 1,000 options purchased, a huge amount, 127. So clearly someone knew about a day in advance that this news is going to come out. Of course, you know, they know that this kind of news is going to move the stock, so they basically kept it under wraps, you know, until the last minute. But clearly someone knew. So how is this, you know, allowed when a day earlier, clearly you see that people knew in advance? And, you know, this was not a coincidence. So that's how things are. This is the piece of news right here. Had the worst days, blah, blah, blah. But yeah. So basically what people did is they knew in advance that this bad piece of news is going to come out. They bet on the put options and they made really good money. I mean, even at 350, their put grew about 10 times over. So if you invested $100,000 into puts, you would have $1 million in a span of 24 hours.